McDonald, Starbucks, and Coke. Now, these are some of the most iconic companies in the world, and they share two things in common. They are all American brands, and they are part of the boycott list in the Middle East. So, the war in Gaza has been spreading far and wide. It's dragging new countries like Iraq and Syria into the mess. It's also opening new fronts like the Red Sea, but now it has evolved into a financial war against the US and their support for Israel. Even the Houthis are aware of the boycotts. Here's how crazy things have gotten. Just hours before facing Western airstrikes, the Houthi leader called for the region to shun Western brands. The scope of the boycott of American and Israeli goods must expand in the Gulf countries. The boycott started in October. It has been over 3 months and the effects are starting to show. Shares of Americana Restaurants, a Middle East franchise operator for KFC, Pizza Hut, and Krispy Kreme, have taken a beating. Since the start of the war, their stock price has collapsed by 27%. The world's biggest fast food chain, McDonald's, has also confirmed that the boycotts are hurting their business. 2 weeks ago, their chief executive went on LinkedIn admitting that misinformation is hurting their Middle East business. So, big US brands are now the latest casualties of the chaos in the Gulf. It's not only the Red Sea or Gaza that's in turmoil, corporate balance sheets are also going up in flames. Because of America's support for Israel, because of the endless diplomatic cover, US sentiment has hit rock bottom. And it's not like the Biden administration wasn't aware. He was cautioned back in November by his very own diplomats. He must be aware of the growing hate against the US building in the Arab world. From a diplomatic cable obtained, it's obvious how serious the situation is getting. Thanks to US support for Israel's campaign, a generation of the Arab public is being lost. And these are the young minds of the Middle East, people who grew up with anti-US sentiments in their hearts. The last thing they would do is to buy from US brands like the good old days. Just listen to this student from Cairo, Egypt. She used to love her favorite cup of coffee, but all that has changed. The war has changed things possibly forever. Me and my friends, we used to go to Starbucks all the time. Now it's a shame if you're seen at one of those. Why should I buy from these Western companies? Consumers have a ton of options to choose from today. US brands might be flying high, but profits can always take a sudden nosedive. While these boycotts are serious, it's important to understand one key fact. These are just the symptoms of an underlying problem and not the cause. Just like the Red Sea attacks, all these eruptions comes from the lack of a ceasefire. The longer a ceasefire eludes the region, the longer the boycotts will last. The more company bottom lines will get punched in the gut. And there's a reason why the boycotts are spreading. The Middle East is a region where protests have consequences, so the only option left is to vote with your wallet. And this is a region that has many nations with big wallets. Saudi Arabia, the UAE, and Qatar, they are huge markets for US brands. And these countries don't just produce oil and gas, they also generate a ton of profits for American companies. Egypt, for example, is the region's most populous country. Over 60% of people there are below the age of 30, which is a huge demographic base for fast food chains. The country is also on track to add almost 2 million consumers this year in 2024 alone. That is a boatload of business that US brands might never capture because of the boycotts. For companies like McDonald's, Starbucks, or even Coke, it's all about expansion and reaching new customers. If you can't capture new markets, your profits are going to stagnate or even start to contract. So corporate America is now paying big for Joe Biden's mistake. It's not just American influence that's draining away in the Gulf, but the earnings of US companies as well. The Middle East, for example, is part of McDonald's international division that accounts for 10% of revenues. So boycotts that impact franchisees will also hurt the revenue sent back to the mother company. And if you think this can't get any worse, it absolutely can. Even the World Court today couldn't bring itself to order a ceasefire. Israel isn't agreeing to one, and from the US side of the fence is total silence as well. The Qataris are desperately trying to broker a hostage deal, but it has fallen apart. Israel doesn't want to grant a permanent ceasefire. They plan to go all the way until Hamas has been wiped out. But many questions still remain, don't they? How long will that take? And how big will the collateral damage get? The impacts are now going global and they are now hitting America's bottom line. Starbucks loses $11 billion in value amid the boycotts, telling us just how serious things can get. Starbucks might not have a branch in Israel, but they are still getting hammered from both the pro-Palestinian and pro-Israeli side. But just being a US consumer brand might be enough for all the hate. Despite record earnings in their fourth quarter, the share price has been hammered, ending the year almost 15% down. And here's the big problem: it's not just boycotts happening in the Middle East anymore. The Gaza war is influencing US consumers directly. Dollars on American soil are being convinced to head for the exits for the biggest brands. And this is yet another straw on the camel's back. But does it really matter? The US economy looks fantastic today. The S&P has gone past a record high and it's clear skies ahead, isn't it? But as you'll quickly see, the markets are an illusion and reality is about to catch up with many investors. The boycotts might be the pin that finally pops the bubble. And here's the big problem with the US stock market today. Yes, the S&P 500 has hit new record highs and everyone on the street is cheering. The S&P in January alone has smashed past Wall Street's estimates for the end of the year. Let that sink in, guys. US stocks are now higher than ever, posting big gains 11 months ahead of schedule. The recent rally was a monster rally. But this should ring alarm bells across Wall Street. The big problem here we have today is a valuation crisis. US equities are more overpriced today than in recent history. The market is expecting the Federal Reserve to come in by March and cut at least 4, 5, or even 6 times this year. So when interest rates fall, this eases the economy and allows people to go out there and spend more money. And on the surface, this looks rather reasonable, it's logical. But sooner or later, these high valuations need to be justified. Are US companies really earning enough money to command a high stock price? For example, Starbucks has a P ratio of nearly 26. 26. The stock price is almost 26 times that of earnings, which is a very big premium to be paying. Investors are willing to pay more because the brand is supposed to be world famous. However, it is still a US brand and a target of the boycotts in the Middle East. If this evolves into something worse, we could see earnings start to fall in a meaningful way, which will in turn bring down the stock price. The economics of boycotts are serious. When people refuse to buy your products, it ruins profits and causes massive financial damage. The ultimate example is, of course, the Bud Light controversy. Just by using the wrong spokesperson, the wrong influencer, sales across America collapsed by nearly $400 million. There were cases and crates of Bud Light left on the shelves because loyal customers were absolutely disgusted with the brand. I remember a whole month where every single news piece was about how angry customers were with Bud Light. And this is an example of how a boycott really went out of control. The parent company Anheuser-Busch saw its US revenue fall by 10.5% in the second quarter last year. And that is a tremendous crash. Could the Middle East boycotts get this bad? Probably not. But US brands are global, and the longer this war drags on, the worse things will progressively get for companies. And we are now moving closer towards a season where companies need to justify their earnings. The earnings from all these big brands needs to match the insane valuations they have. And here's an important chart that shows us the big danger of US equities. And it's called the equity risk premium. The bigger the gap here, the better it is for stocks, the more upside potential you have to profit. However, things today have flipped. The earnings of S&P 500 companies yield is on par with the 10-year treasury yield. And this is bad news. Stocks today looks extremely overpriced versus bonds. There's almost no equity risk premium here. So having boycotts on US companies is more dangerous today than in the last 20 years. It threatens to lower earnings and push stock prices off a cliff. It's not the boycotts per se that's scary, but the timing of them. And this brings us to the big question: how long will this collateral damage last? This is where we need to look at the recent ICJ ruling that just came out. There are very few things in the world that can arm twist Israel to stop. UN resolutions by themselves are effectively useless. The US will simply veto bills away. But this ICJ ruling does put Israel and America into a box, and let us explain. 6 key measures were passed and they all center around prevention and not admission, but they are still significant. For example, ensuring the military doesn't commit them, as well as delivering basic services and humanitarian aid. The ICJ stopped short of ordering a ceasefire because if they did, it would be directly saying that Israel is guilty. So there's a fine balancing act the judges were doing here. The next step is to go back to the UN Security Council for enforcement. And here's where things get really interesting. This is one resolution that America can't afford to veto. It's the ultimate trap for the US. If they do veto it, it would mean the US has effectively overturned the rules-based international order. President Biden cancelling the order would be the final nail in the coffin. US influence in the Middle East would be effectively over. As it stands, the sentiment for anything Western is circling the toilet in the Middle East. And you don't need to look far for evidence of this. Let's use the Red Sea chaos as a good example. A week ago, the Houthis promised safe passage to Russian and Chinese ships. Most recently, the Saudis have confirmed they are still sending oil through the Red Sea towards the Suez. Energy cargoes from Saudi Arabia are still transiting the El Mandeb Strait without any incident. Sure, the voyages cost more, but at least your vessels and cargoes aren't exploding. But the same can't be said for the Western vessels, guys. It's a whole different story. They are being fired upon. Just a day ago, the British oil tanker, the Marlin Luanda, was literally on fire. The Houthis fired a missile and it struck the tanker that was carrying Russian fuel. The reason was in response to American-British aggression. Now extend this state of affairs on the high seas to boycotts on US brands and companies. And this will only continue. Whether it stops or not will be linked to the ceasefire. And here's the issue. The longer this boycott lasts, the greater the odds of it spreading across the world, across the rest of the globe, well beyond the Middle East. It won't stop at just Egypt or Turkey. Domino's Pizza is the latest US brand hit by the backlash. The franchisee operating outside of the US reported that same-store sales in Asia fell by nearly 9% in the second half of 2023. So chips are already starting to fall, and hopefully a ceasefire comes soon and this mess will end. Now, I want to be clear, a boycott isn't a great thing. Real people lose their jobs, local people are affected, sometimes friends and family that we know as well. But it is very important to understand why these are happening and to pinpoint the root cause of the backlash. Only then can we truly have a solution. So while the US economy looks great today, anything and everything can change in a heartbeat. Now that the ICJ has ruled, the US is now under enormous pressure to rein in Israel. Even in a self-serving way, a ceasefire makes sense. The Security Council is going to meet next week to discuss the ruling, and don't be surprised if another ceasefire resolution goes into vote again. Whether the boycotts get better or gets even worse will hinge on how the US votes this time. If a ceasefire happens, we can expect the boycotts to slowly fritter away. But if the US vetoes yet another resolution, then expect more eruptions in the Middle East. The backlash will be epic not just in the Red Sea, but on US brands across the world as well. So let's hope and pray for ceasefire because beyond that, I can't see any other way out. So let me know what you think, guys. Let me know in the comments below. And as always, stay safe and be well.